welcome. This is Mary Ellen McGonagle with your Friday afternoon MEM Edge show. And this is the show where we bring you where the action is in the broader markets. And as usual, we are going to be starting here by taking a look at the broader markets. You want to be aware of how healthy or not these broader market indices are at this point in time. We'll also talk about support, resistance, and other characteristics as well. And from there, I'll share with you some of the more impactful news that drove price action last week. Another bumpy ride, as you'll see. And then last up, we're going to go ahead and take a look behind the markets at some of those sectors and underlying industry groups. We're seeing a little bit more in the way of sector rotation that you will want to be aware of. And here we are with some of those more impactful headline news from last week. First up, Fed Chair Powell and his crew raised interest rates by 0.25%. And this was certainly anticipated. However, beyond that, Fed Chair Powell did have a lot in the way of comments on Wednesday. And among those was the fact that he is going to continue to keep that target rate at 5.1%. However, no anticipation of lowering or cutting interest rates this year. And initially, that was quite negative for the markets on Wednesday. However, further examination as it relates to the inclination or the realization that rates may not be raised again this year. And that really helped certain parts of the market. I'll get into that as we move forward. Also, we did see weekly jobless claims increase, and that's what the Federal Reserve wants to see. They want to see unemployment increase. It wasn't by much, but it was enough to spark another rally further on Thursday. We did see durable goods orders drop, and that's an inclination or a move toward the economy slowing down. We are seeing other news items come forth as it relates to business spending. And of course, we're seeing businesses reduce their staff. So certainly another area where the Federal Reserve, this is what they want to see, an economy that is not expanding. Next week, we have another pretty big week. Core PCE data will be released. This is another major metric for the Federal Reserve. So all eyes will be on that as we move further into the end of the first quarter. So let's go ahead and take a look at the broader markets. Here we are. This is a daily price chart of the S&P 500 and a couple of metrics that you will want to be aware of. First up is this red 50-day simple moving average. And you can see that we did have a rally up, and very briefly on Wednesday, we were above that 50-day simple moving average. Fed Chair Powell's comments and other factors did push the index lower. So we are still finding resistance at that 50-day simple moving average. That's going to be your first area of upside resistance. From there, you will want to pay close attention to that 4,100 level. That's a longer term area of resistance. So we will need to get above both of these hurdles. And then also paying attention to these outside momentum indicators. The RSI is still in negative territory. Stochastics are positive, did dip into positive territory, but for me, it is going to be all about that RSI moving above that 50 into positive territory, with the S&P 500 also doing the same. And that in turn would certainly have me more constructive on the broader markets. And let's go ahead, because you will also want to be aware of the Nasdaq. I am going to share with you a daily price chart view there. And the Nasdaq is behaving quite a bit better. And I'm sure many of you are aware of that. We are continuing to see vibrancy in certainly those mega cap FANG stocks and certain areas of technology. So here we are with the Nasdaq above each of these simple moving averages, your outside momentum RSI in positive territory, trending higher. Likewise with the stochastics, this is a faster moving momentum indicator up here in positive territory. And also we can see that we broke above, again, I talked about those moving averages. Now, while the Nasdaq is in an uptrend, I would argue it is not time to be all in. There are other characteristics that are shaping up with the markets. And as we move forward, I will share that with you. But from here, let's go ahead and take a look at those 11 underlying sectors in the S&P 500. And I have them displayed here with a 2-month daily price chart view, added that relative strength indicator, and the sectors are now in descending order as it relates to relative strength. Now, this view is not whippy. It's a progression that tends to be rather slow. Up here in this left quartile are your stronger areas, and take a look. Technology still up here at the forefront. Let's take a look at this chart. Very, very similar to the Nasdaq, and it's even a little bit stronger. So we can see this upward momentum shaping up, and your MACD, RSI, both in positive territory. We'll take a look at where that outperformance is taking shape there. Of note is the fact that in technology, the two heaviest weighted names are Microsoft and Apple, and both stocks are faring quite well. From here, XLC is communication services, and this is another area that over the last 2 weeks has been quite vibrant. The biggest holdings here are Netflix and Alphabet. Netflix certainly had a superior outperforming week, as did Alphabet. So that is one of a couple of areas among communication services that are pushing that index higher. Let's take a look down here, and this is something that is of note. The fact that the MACD on XLC on the daily chart is just entering into positive territory, and that is telling us that this downtrend has reversed. So from here, let's go ahead and take a look at some of these other sectors up here at the forefront, and areas that actually performed well today on Friday. We did see a little bit of a move into some of these more defensive areas: consumer staples, healthcare, and utilities. So from here, I want to share with you the individual charts for these sectors, because it's only been today that consumer staple stocks entered into positive territory with a close above this 50-day simple moving average. We do have a positive RSI. And then from here, I'm just going to go ahead and add the stochastics. They are faster moving. I do tend to use those when looking at broader market indexes or sectors, and we can see that those stochastics are in positive territory as well. I'm going to share a couple of names from the staples area for those of you that are looking to diversify, perhaps really buffer some of your other holdings. Also with healthcare, we can see it's been in a very defined downtrend since December. We are starting to see a bit in the way of awakening. We're not positive yet, but I will share an area that is starting to firm up, and why. So let's go ahead from here. Utilities had a good day, a couple of good days, but for the most part, even though up 3% today, this particular group is down and out. It's not an area that I would be looking to if you are looking for more defensive plays. So as we move forward, I did want to share with you some other areas that are seemingly beginning to potentially firm up. A lot of ifs there, but this is basic materials, and you can see we have that wedge into kind of a almost close to a V-shaped recover, pulled back, but we are at least putting in higher lows for materials. I'll get into some names there that are shaping up and why. And then as we move forward, of course, financials down and out, but also real estate. And many of you may know that here we are with XLRE, the REIT ETF, in particular, commercial real estate. There's a lot of talk that we could see defaults beginning to take shape there with tightening in the lending space. So let's go ahead from here. I do want to share with you some ETFs that I find to be super helpful as it relates to staying on top of market activity, where that strength is. So again, here I'm using ETFs, 2-month daily price chart view. I'm going to update this view here, and let's take a look. Up here front and center is gold, and of course we can see these gaps up on a daily basis that are taking place here. And so we are seeing this safe haven play beginning to shape up. I'm going to share with you as we move forward a longer term chart, but let's take a look at some of these other ETFs. We talked about the Nasdaq and technology. So here we are, software stocks. And this is an area that last week I shared with you that it did reverse its downtrend, and it did fare well this week. It was on par with the Nasdaq, up 1.7%. I'll share a couple of names in that area. But from my work, even stronger is the semiconductor index. This is SOXX. It did not perform as well as software this week, but you can see it had that base breakout yesterday, Thursday, and your momentum is in positive territory with that nice MACD black line up through the red, indicating that this downtrend has reversed. The sell-off today in semis, there was buying into the close, so that's constructive. From here, let's go ahead and take a look at volatility, because this is always going to be closely watched during periods where we are seeing bank industry volatility. So from here, volatility is here at about 22, still elevated. Ideally, you want it to be down in that 16 to 18 range. But it is now below that 200-day. So that's good news there. Volatility kind of settling in a bit, even though there is still talk that we could see further bank deterioration. But overall, investors are a little more or less fearful with that volatility index declining. So I did mention that healthcare is beginning to firm up. Not the prettiest chart, but this is BioTech stocks. IBB is the ticker symbol, only up 1.1% this week. But again, that higher low concept, we're not out of the woods yet. I will need to see a break above these moving averages, get those momentum indicators into positive territory. But I will share a couple of names with you from this group that are on certainly my watch list. So from here, we can take a look. Energy got hit this week. Actually, it was up 1.2% this week. So we did see a little bit of a rally shaping up after this really period of deterioration. And this decline is all about recession fears, global recession fears, and the fact that a declining global economic environment is going to reduce the need for oil. This is Brent crude. So we can see that Brent crude did improve this week, up about 3.5%. So we're now in that $75 range. However, well below the peak that we did experience, certainly during other periods. Here's a weekly chart, and going back to the beginning of 2022 when we were up above and about that 110 level. But interesting to see oil prices beginning to potentially reverse their downtrend. So we would not be finalizing or looking at everything unless we looked at the yield on this 10-year. And we are seeing interest rates continue to decline. So this 10-year is now at about 3.4%. And if you go back to this period about 3 weeks ago, we were just dipping above that 4%. So pretty significant decline here in these these 10-year yield. This is another backdrop that is constructive for technology stocks. They do fare well during a declining interest rate period. In essence, their future value of their earnings are improved as interest rates decline. So that is another backdrop item to be aware of. So let's go ahead. I shared with you that gold daily price chart. I did also from here want to share with you a bigger view, and this is a longer term view, a monthly chart of gold. So a couple of things of note here is when you're looking at a monthly chart of a stock or of an ETF, really any kind of security, you can see that I have a moving average here, and you will want to add a 6-month moving average, and then pay attention to those same metrics that you would on a daily or a weekly. So from here, I did want to point out a couple of characteristics with gold. About 4 weeks ago, we did see a move back above this 6-week moving average as momentum began to improve. But here more recently, the RSI is now up in positive territory. And take a look, that MACD just now having that black line up through the red crossover. So longer term, we can see that this recent downtrend has been reversed. So of note, if we go back to other time periods where this took place, and when you're looking at a monthly chart, really it's going to be quite helpful as far as forming an opinion on the longer term outlook for a given name. So if we go back to the beginning of 2019, similar dynamics with that MACD, RSI, and a move above that 6-month moving average. Not saying it's going to happen for sure, but it certainly looks quite constructive. As always, you want to be aware of the characteristics on a more negative front as that RSI dips below that net neutral, and we see deterioration in other metrics relative to momentum. So also from here, I did want to share with you a look at some of the banking stocks. Let's go ahead. I'm going to take us to that's a weekly. There we are with the daily price chart. So here we are with one of many banks. This is Citigroup. These larger banks are actually holding in quite a bit better than regional banks. And actually, I did not share that with you in that ETF view, but let's take a look. This is KRE, the Regional Banking ETF, really down and out, falling off a cliff, if I may. And this, in fact, is a similar view to what you will see when you look at some of these individual names. Some of them are down quite a bit more even. So I do get questions quite a bit throughout the week as it relates to, is it time to dip your toe in? Are these stocks viable? So I did want to share with you a view. This is East West Bancorp, not down quite as much, but as it relates to what you're going to want to be on the lookout for, because of course we all want to be the first in, pick those bottoms on some of these bank stocks, but you do want to be careful. I'm going to take us back to this particular view. I am not in any way anticipating 2008, 2009 in the banking system. This collapse that we experienced, we're looking here at Citigroup in 2008, and it was a whole entire different reason for the banking collapse. It had to do with collateral. It was not treasury related. U.S. treasuries are guaranteed. This was all about mortgages and other corporate banking, AIG, insurance issues, just a whole wealth of negative news, not similar to it is not similar. So what we are experiencing now in the banking system is not, I don't anticipate in any way for it to reiterate and relive this. But what I did want to do from a chart standpoint is highlight the characteristics going back into 2008 and 09, for instance, with Citigroup. Here's what you will want to see. First up is a move above these shorter term moving averages. In March 2009 is when we did get that follow through day and the market bottom did take place. So we had that characteristic also, but more importantly is looking at this chart and technically the move above these moving averages on the daily chart, coupled with the RSI getting into positive territory as well as the MACD. So you want to get that momentum shift. Now, from here, Citi did mark time before entering something of an uptrend, but at the very least, you knew that that downside price action was over or behind you. So from here, let's go ahead and take a look at a current chart of, as for instance, Citi. And what we can see is that you were oversold. We really don't need to go back too far to see a similar characteristic here in October as these bank stocks were coming out with very poor numbers. But let's take a look at the momentum here. You can see your RSI just really drifting on the floor here, trending sideways. Likewise with that MACD, still very much in a downtrend. So for those of you looking to bottom fish, you will want to see that MACD have that black line up through the red as your first sign. And then secondly, that RSI in positive territory, a move above these shorter term moving averages. This 10-day is acting as upside resistance before you can consider that this particular group has in fact reversed. So from here, let's go ahead and I'm going to share with you, I talked about areas that are working or at least beginning to firm up. So within the software space, we can take a look at a couple of names that are on my watch list, or certainly are outperforming. And this is Palo Alto. It is a software security stock. And the company, you can see this gap up here on earnings that took place at the end of February. And this is all about strong quarterly earnings and management guiding their estimates higher going forward. So the stock really pulled back very modestly compared to the broader markets, found support at this 21-day simple moving average, and then last week broke out of this nice 2-month base. So that certainly is of interest. And then from there, another name that many of you, I'm sure, are aware of, this is Adobe. And they too did come out with numbers right here in mid-March. You can see the uptrend that is shaping up. And then that MACD just getting into positive territory. So that's a couple of names in the software space. From here, I did want to take a look at BioTech. I talked about that particular group shaping up here. So a couple of names that I have on my watch list. Now, Vertex, VRTX, there are very few. There are 610 publicly traded biotech stocks. Very few of them actually have earnings. And here we are with one of them. This is Vertex, VRTX. And I'm going to pull up a weekly here because you want to have a sense that this stock, while it is volatile, biotechs overall are volatile, it does have a predisposition to really get going and outperform once it is on the move. So we can take a look at today. It was up quite a bit, 3% in a very nice confirmed uptrend. We can see the RSI up here in positive territory, but really what's of interest to me is the fact that that MACD is entering into positive territory. When these stocks get going, you will want to put a 5-day simple moving average in there and use that. If any pullback to that area is going to be an ideal buy point. And here we are with another biotech name. This is Regeneron, REGN. We can see this gap up into a base breakout on positive news, nice high volume taking place with positive momentum indicators. So those are two names. And then Amgen and Gilead, I do have on my watch list. These are larger bellwether names that are in the beginning stages of potentially reversing their downtrend. So I believe I am out of time, but I would be remiss to not point out at least one of these home builders. They've really been holding in quite well. PulteGroup came in with strong numbers. The declining interest rate environment is bullish going forward. And last up, I did talk about consumer staples. And here we are with Smuckers, SJM. You can see it's turning positive here. I'm also going to pull up this full quote using StockCharts.com, their view, and you can see that it is a nice 2.6% yielder. One other name in that consumer staples space is MNST. That's Monster Beverage, also holding in really quite well. The company came out with strong numbers recently. Again, that full quote view will provide you with information, and MNST does not have a yield. And then last up here is Sprouts Farmer Market, SFM, had a gap up on earnings, pulled back, but is holding in quite well. And we'll leave it at that. Everyone, great to see you here. I'll look for you again next Friday.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.